Right, hello everybody. Steve Griffiths here, developer of the MT Predictor software program. If you could just let me know whether you can hear me okay and whether you can see the chart okay and our risk disclaimer okay there as well. Right, while we do that, we'll just remind you that all examples in this training room should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. This is a really important point that we all understand that no matter what trading approach we have, there always will be losing trades. And it's important to understand that. It's just important to keep those losses small. Right, okay. So I think first I want to start with an apology, actually. I wanted to do a bit more analysis on the sort of the large degree picture of the US markets last week, and I probably didn't go into it as much detail as I should have done. So I want to go through that again just to show you where we are. So for you guys who are new to MT Predictor, this is probably a bit more advanced stuff that shows you what you can do with the software. And we'll come on to a bit more straightforward everyday stuff on the USE minis with a closer look at some day trading a bit later in the webinar. But I want to start by basically looking at our longer term position. Right, so this is our add-ons for NinjaTrader 8. So if you remember from quite a while, we've actually had on like a weekly chart. Remember we had our DP, our weekly DP off that low, which came in and caught the bottom there very nicely. So when we came to a daily chart, basically we've been rallying off this DP for quite a while now, haven't we? And what I've been saying for quite a while is we've been wanting to look to see whether this is a corrective rally. In other words, if this is corrective, it means that we had a major high coming in up at this top here. So in other words, the market's gone down, bounced up, and has made a corrective rally. What I touched on briefly last week was if this wasn't a corrective rally and the market was going to carry on up, then the area to be very aware of is if we take a DP off the high here, so you just hover over the pivot, right mouse click, do decision point, that gives you an area of resistance. So that's a major resistance area if we break up to new highs. But I had a look at what the market was doing in a bit more detail in a video that I put together. It was either Tuesday or Wednesday last week, just before the market fell sharply here. So I'll just clear this all off because I want to have a look at what the pattern is going up here. So ideally what we're looking to see is whether this actually rallies in an ABC pattern. Why do we want to see that? Well, we want to see that because if it is an ABC, that looks most likely that it's going to be corrective. Now, there isn't really a great pattern here because we had a little wiggle here. So what I'm going to do is I'm going to go to a slightly shorter time frame chart. I want to go to the 8-hour chart, which is 480 minutes in NinjaTrader. So I'll just load that up. By the way, in NinjaTrader, just as a tip, if I right mouse click, I go to data series. What I do here is on number of bars, I load the number of bars here as 1,000. I don't say days because obviously that's then different for different time frames. So what I do is I keep that at bars and just keep it at 1,000. That just keeps it nice and easy when you're changing different time frames. So there's a little tip there for you if you're using NinjaTrader. So here's our rally off this. I'm not looking at any setups. I'm just doing some longer term analysis with the more advanced tools we have in MT Predictor. Now, we have the intermediate swings on our charts here, and there aren't really any obvious patterns we can see on this at the moment. So what I'm going to do is put the major swings on just to see whether we get any clearer picture on that. So for this, I right mouse click, I go to indicators. Whoops, there's my mouse. Indicators. I come down to our MTP analysis indicator. I then scroll down a bit to display major swings. Do you see that there? Display major swings. I tick that. I do OK. And can you see how the major swings have now come on the chart with a slightly darker color? There you go, there. Now, hopefully you can all see that hang on a second. Now we put those major swings on. It looks like we have 3 swings going up here. Do you see that? To there, to there, to there. So if I right mouse click over this pivot high here, right mouse click, let's see what the Elliott wave pattern is this time on the major time frame, not the intermediate, the major time frame, because we're looking at the major swing. So if I do Elliott wave major, do you see how suddenly a week ago we were actually at the minimum wave CWPT up here? Do you see that? Perhaps if I zoom out a bit like that, it makes it just a little bit easier. So the rally coming off this low does look like it's unfolded as an A, B, C, right into that high. And I did a video that's on the homepage of the MT Predictor website looking at this here last week to show you that we were at the minimum wave CWPT. That was just before the sharp fall we had there. So, I apologize for not going over this last week because it probably would have got you ready for that sharp fall, but I wanted just to show you that, the tools are in the software here. So what does this mean for us now? Well, what it means is if this is indeed an ABC corrective rally like this, then this high here from last week should stay intact. In other words, we now have a pivot on which we can either base longer term positions on the short side if that high stays intact, or if it doesn't, well then that's where we had the DP up here on a run to new highs. So do you see what I'm saying is that this should be an A, B, C corrective pattern, which ultimately leads to a continued decline down to new lows. Or if this pivot is exceeded, i.e. it breaches this, then the next place it's probably going to run to is up to new highs up here. It's going to go above the high back there in February. So it just gives you a bit more context on the large degree position on the markets. So how many of you guys actually did that analysis for yourselves last week and saw that there was a high, an ABC corrective high coming in here last week? And hopefully if you didn't, can you see how you can use the more advanced tools in the software for identifying that? I'll just clear everything off. I'm just going to take off the major swings just for a second because the market's rallied in the last few days. Okay, so again, that should be no surprise to you guys. Why should that be no surprise to you guys? Well, if I do this and I just put a bit of white space on, if I take that off like that, so there's a bit of white space on up to the high there. That was the rally into the high. When we're placing DPs on our chart, we normally use the last swing into the high or low, don't we? This is the first area we look for, the last swing into the high or low. So that's there is the last swing to the high. Do you see that? There's the last swing to the high on the same 480-minute time frame. So we come back to this pivot here. We right mouse click, we do decision point. This gives us an area of support. This is the same thing we do again and again and again. So this had an area of potential support when the market was up at this level here. Let's just see what the market's done since. Do you see that? It's come right down to this level here, off which we've had the rally of the last couple of days. So this is the kind of thing you could do with these DPs. And it gives you an areas of, support and resistance in advance. So, this decline here shouldn't have come in as any surprise. And this rally here should not come as any surprise as well, because you were coming off this DP support zone. So this is why it's so important to have these on your charts. Mark, so what you're saying, Mark's saying is if this isn't a wave 2 or B rally. So what Mark's actually saying is if this entire rally up here is a wave 2 or B, in other words, subdivided into an ABC, what could we anticipate next? Well, let's go back to the daily chart. Just take that off. By the way, so if this entire rally up here is a wave 2 or B, so if I right mouse click here, do Elliott wave major, it's gone beyond the area where we'd anticipate the sort of wave 2 or B to end, i.e. in this level here. But if this is indeed a wave 2 or B, then then we may get a decline all the way down. If we get a decline down here, well, then the first area of a bit larger degree support is on the daily chart. This is the last swing into the high, isn't it? So this pivot here will then give us an area of a bit more major support if this reverses round and starts to come down. But Mark is also asking on a slightly shorter time frame. So he's saying on this last bounce up over the last couple of days, this last little bounce up here, where could we likely to end here? On this little rally here. Well, ideally, this should subdivide into an ABC if it's corrected. So let's come down a time frame. Let's come down to a 240 minute. And ideally this should be an ABC, and of course it's not. So at the moment, ideally what we should be doing is should be coming into, a wave 2 or B, which is not. So ideally, Mark, if this was going to unfold as an ABC, well, then that's what we'll be looking for. But of course, it isn't doing that at the moment. So this is where the pattern is not particularly clear at this particular point in time. So we'll have to wait and see what happens. I mean, we might well decline down here, then do another A. If this is A, down here for a B, up for a C a bit later. But, it's not as clear as we'd like. I mean, sometimes this is what happens with the markets. We don't always have a clear pattern all the time, do we? But what we can say is this area here is the decision, is the area where it's going to make the decision. So if the market then rallies up and takes out this previous high here, well, then odds on we're probably going to make a run to new highs totally, as I said a bit earlier. Yeah, because you're right. This does look more impulsive. This swing up here does look more impulsive than corrective. But of course, the major thing is what happens up at this high here. So that's probably what we'd be looking for to see what happens there. Right, let's have a look down at some a bit shorter time frames. So I'll just stick with NinjaTrader for a bit. Right, here's a chart of the ES on slightly shorter time frames. So I just want to recap how we actually use MT Predictor, because you can see we have automatic setups on our chart. We have a trend indicator here, which is blue for up, black for in the process of making a reversal, and red for down. So do you just treat it as an automatic 100% sort of mechanical system? Well, the answer is no, we don't. The reason we don't is because markets are basically random half the time. What do I mean by that? I mean that markets are basically in a position where you don't know the position. In other words, they're random. You can't tell what's going on. It's like fog coming down. You don't really know what on earth's going on. And I think this is important to really understand, is that half the time you can't really do any valuable analysis because the markets are not in a clear position. So what does that mean? Well, it means you only trade when the picture's clear. So of course the question is, how do we know when the picture's clear? Well, when you're doing your standard MT Predictor analysis for your trade setups, not what I've just done a minute ago, that was more a bit more advanced market analysis. But if we're looking for trade setups, we go to the higher time frame chart. So if you're, say, trading daily stocks, you go to a weekly chart. If you're, say, trading 15-minute Forex, you go to an hourly chart. As this is a 3-minute chart, we then come out to the 15-minute chart. I just want to put a bit of white space on the right-hand side again. I just want to take it back to before yesterday even opened. So before yesterday even opened, this was the position of the 15-minute ES. Now here I'm using a day session only chart. What do I mean by that? If I look at data series, it's basically the CME US Index RTH, or regular trading hours. This goes from 9:30 to 16:15 in the day. It's what we call the day session. In other words, when the market's open, or the main stock market's open, it's when most of the volume comes through in the E-minis. This is probably old school in that us old school day traders, we tend to focus on this time frame because it's when the highest volume is playing out. We've had lots of discussions before about whether you should use this or the 24-hour session. I like to see both. I like to see both telling you the same kind of pattern. But for now, we're just looking at the regular trading hours. So how do we decide on whether the picture's clear? Well, for this, we place our DPs on our chart. These are decision points. These are areas where markets are going to make support or resistance. They're leading indicators. They're on the chart in advance. We don't want to just purely and simply have a market analyzer, or I haven't got one in on this particular screen, or a scanner where basically you find a setup, then you react to it. This is the way most people work. And you're forever in reaction mode. What we want to try and get you is to be in anticipation mode. In other words, before yesterday even opened, this was the last pivot low. Do we see that? So we right mouse click, we do decision point. This gives you an area of potential support. Do you see how it's on the chart in advance? So let's now see what yesterday did. Well, yesterday did this. It went down into here and then it rallied up. In other words, the market was rallying off a decision point low. In other words, the market was rallying off the area you'd anticipated. In other words, it was doing what you anticipated, i.e. the picture's clear. Compare that to, say, the NQ yesterday. If I do the NQ, exactly the same. There was that last low. We do a decision point. There's the decision point down there. Can you see how it didn't reach it? So if I go back down to the 3-minute chart, there's the 3-minute chart. The market didn't reach it. In other words, the picture was not clear because it didn't actually reverse at the level. So in other words, the picture on the NQ was not clear, but compare that to the ES. Now, if I go down to the 3-minute chart, I'll just take that white space off. So we've got the whole chart to work with. There we go. Do you see how that looks a lot clearer? In other words, the market is reversing right off our 15-minute support zone. In other words, it's a lovely picture. So this is what we're looking for. We're looking to trade when the picture's clear, not when the picture's not clear. I always get pulled up for this about using idealized examples. Well, surely that's what you should do. Surely you should, when the picture's not clear, stand aside, but only wait until you get a clear picture. And as you see yesterday, that nailed the very bar of the low of the day yesterday. So wouldn't it be nice if you were looking to trade yesterday to know that you had this support zone on the chart? So when the market got into it, you weren't looking to sell down here, because the last thing you want to do is sell the low of the day. You knew that this was an area of potential support. So you should be looking for a reversal. And in particular, after that, then the large degree trend would then turn up. There was a VS buy setup there. That would have actually been a very nice trade if I right mouse click and analyze. That would have had you long for pretty much most of the day for a lovely profit of approximately 6.7R profit. Although it was a very big risk, you'd probably want to be trading the MES rather than the ES. The only thing I'll say about a VS that unfolds so close to the beginning of the day is there will naturally be a lot of volume unfolding in the first few bars of the day, because that's when the markets are just opening. In other words, the US stock market is just opening. You tend to get a lot of more traders doing trades in those first few minutes. So just be a bit wary of any VS setups that unfold that early to the start of the day. But what does that mean, though, for the rest of the day? Well, what it means is the large degree trend is up. So yeah, Ravar, you're exactly right. That probably wouldn't be an ideal one to take because it was so close to the beginning of the day. A real pity, because that did actually nail the low of the day beautifully. But what that did mean is it now, as the market started to rally off that, it then gave you the large degree trend direction for the rest of the day. Our MTP trend then went from black to blue. So it showed you that the trend was up. If the trend was up, what do you want to be doing about these potential sell setups? So when a sell setup comes in here, did you want to be considering that sell setup? Bear in mind the MTP trend is blue and you're coming off really clear support like this. Well, obviously not. But so do you see how that then helped you avoid what would have been a losing trade there by indicating the large degree trend is up? Where would the large degree trend be up to? In other words, where is the next resistance area? Well, again, you go to the higher time frame chart. Where would you take the DP off? Well, as we've already said, the most important swing is the last swing into the low. So that would be the low. This here would be the last swing into the low. Do you see that? There's the last swing into the low. that pivot there, you right mouse click, you do decision point. This would have given you an area of resistance, again, on your chart in advance. So when we go back down to the 3-minute chart, can you see how suddenly you have support down here, resistance up here? So between that, our MTP trend is blue. It indicates the larger trend is up. Therefore, ideally, you should be looking to take buy setups. So that means avoiding those ones. But we did have this nice TS2 buy setup here a bit later in the day. We right mouse click, analyze trade setup up into the first target there. Do you see there's the first target? That would have been right at our higher time frame resistance, where the profit was. I just about to read it there, 5.8R. So our position sizing comes in here. Remember, you can do smaller accounts. You set up smaller accounts if you want. But on a sample 20,000 account, you're risking 2%. That would have been a profit of, well, 5.8, or should we say 5.5 times R. So, but can you see how that was in the direction of the large degree trend? We had a clear reversal at the low. We had a clear trend direction up. Therefore, that would have been a good trade setup. Does that make sense for everyone? And what we're trying to do is we're trying to look to only decide on when the picture's clear on markets that are making clear reversals. So not the NQ, but the ES, and then trade in the direction of those large degree trends. TJ, was that, how do you show the market analyzer? Was that what you were talking about? Market analyzer? Yeah, if you want to set up a market analyzer, it's really easy. You go to the control center. You go to what, new market analyzer. There you go. So you pull up a new market analyzer. We right mouse click. We have pre-built templates. So we load pre-built templates. I'm going to use the day session only for the MTP predictor. This is what I mean by the regular trading hours, the day session only. I'm going to load that template. So that then gives you for the 3, 5, and 15 minute. You're now going to add some instruments. Well, I'll add the ES, YM, and NQ. And there you go. It's as simple as that. You've now got a market analyzer, which is following the 3 minute, 5 minute, 15 minute for, if I right mouse click, do columns, and then I've clicked on the individual columns. You can see that for the individual columns, that's for the 3 minute column, 800 bars is absolutely fine. And this one here is for the regular trading hours session. So that's how you set up a market analyzer. Really, really easy. If you want to add some different new columns in there, you right mouse click, do columns, then come down to MT Predictor. So you can add in your Elliott waves if you want. You can add in your MTP trend as well if you want. So you can add in some other columns into that market analyzer and make it as you wish. So dead easy to do. But you see, the whole idea is that we're not trying to work as most people do in NinjaTrader, and where they have a scanner, i.e. the market analyzer, it then beeps and then you react to it. What you should have been doing yesterday, you should have had those levels on the chart, so you were anticipating, say, right now I want to try and look for the long ones. I'm anticipating what I'm hoping is going to unfold. Then when it comes through, i.e. then when your market analyzer squeaks at you for that TS2 buy setup, which it would have done on the 3 minute chart, then you know that that's the kind of trade setup you want to look for. It just helps so much. Just helps so much being ready for that. Right, does that help on what we're looking at yesterday? Are there any questions on that before we move over to the Forex charts? A lot of you are asking me about the British pound. So I'm going to go over to the British pound chart to have a look at that as a Forex charts. Yeah, Raviar said there's some good trade setups on the MES, the micro accounts. Yeah, so some good trade setups yesterday. But it's really nice, wasn't it, when you have a situation like this, when you absolutely, you nail the low of the day. In other words, this level's on the chart in advance, the market comes down, nails the very bar of the low of the day, and you've then got the trend for the rest of the day. When you get a clear picture like this, it really is quite nice, isn't it? But this is why I say to you guys, only trade when the picture's clear. When it's like this, and you're umming and ahhing, and I don't quite know, is it support, is it not? That's when you deem the picture's unclear and you don't work with it. Because when you wait until the picture's clear, life is so much easier. And I just think that makes just so much sense, guys. This is why we have these DPs on, on our charts, that they stay there when you change time frames. So it just makes it easier to visually see when these come in. So this is what we're looking for. We're looking for lovely, clear, clean pictures like this. So it's nice though. It's always like it when we have a DP nailing the high and low of the day like that. It's quite nice. Right, let's go along to our standalone version, and lo and behold, there's a chart of the British pound. Quite a lot of you are actually were asking about this. It's a 4-hourly chart of the British pound. So what's the British pound done? Well, there was our higher time frame daily support. It came up. This is where we had our wave 3 set up. I think last week what I was saying was there's our typical wave 3 WPT for our wave 3 trade setup up to 8.7 hour. We looked at that last week. The next area of resistance, i.e. the higher time frame chart, would have been up here. So if you had have held on to it up into that level, that would have then increased the profit up to 14 or so R. So that would have been really, really nice. So that would have been a lovely trade setup. Let's now have a look at some losing trades. It's always important to look at losing trades because here we've gone up into a higher time frame resistance. Just go to the daily chart, so where they came off. They came off that last pivot high because there's the low, there's the last pivot high. That's the resistance. It came right up to that level really, really nicely indeed. So now if we go down to the slightly shorter time frame chart on the 480 or the 4-hourly chart, here you would have gone up into resistance. I remember we had this trade setup we were looking at last week, which basically got to within a few pips of the target. So at the very least, you'd have probably had your stop at break even on that trade setup. So even though it would have been a trade that didn't work out, that would have probably been a break even trade. What happened next? You see there's 2 more history triangles here. So this would have probably been a trade setup as well. A VS1 here that probably would have taken you in and then stopped you out. So that would have probably been a losing trade. We then had another one here on this bar afterwards. Again, another VS, which would have taken you in. I don't know whether that took you in and then took you out, or whether it went down and went up. It's very difficult to see there on that shorter time frame. Let's see if we can go into like a 15-minute and see what happened. Yeah, it would be very difficult to see what happened on that. So that might have been a losing trade or not. We don't quite know. So if it was a losing trade, it would have been a -1 hour loss. Remember, losses can and will and do unfold. It doesn't matter what trading approach, you will get losing trades. But the idea being is that because we use position sizing, which varies the number of lots, contracts, or shares, it keeps the losses small at -1 R, in other words, 1 risk unit. So even if there were 2 losing trades there, they'd have been small in comparison to that one at 8R, and if you had held it into the higher time frame resistance at 14R. That's what we're aiming to do with MT Predictor, not avoid losing trades, but just keep the losses small when they come through. Just want to let you guys know there's a bit of a thunderstorm rolling around outside the office at the moment, so I hopefully it doesn't cut the power off. So if I suddenly disappear, yeah, sorry about that. It means that we've probably been hit by lightning and had a power outage. So fingers crossed that won't happen. So does that make sense that you will get losing trades even though the picture looks to be quite clear. But the idea being is when the profits come through, the profits are large in relation to the losses. So let's have a look at what's going on here on this 4-hourly chart. Well, ideally, we're hopefully going to get an ABC correction here sometime, an ABC correction to then unfold for the British pound to then carry on down again. Why? Because this is at higher time frame resistance. Here's the initial decline down on this time frame. Our MTP trend has gone red. So this is where you can now start to anticipate in advance that if we now get an ABC correction, perhaps down to here, A, up to there, B, then you can start to look for a potential short trade. So this is what I mean about working in advance of the market. We don't know whether that is going to unfold. What I'm saying is that if it does, you're then prepared for it. If it doesn't, you then stand aside and look for another market, another time frame to see if you get a clearer picture. Does that make sense to everybody? While you're thinking about that, I do want to follow up on the British pound, not British pound, the US dollar, Japanese yen. We were looking at this on the daily chart. We were looking at this, I think, last week, was it, Mark, with you? In that you had a wave 3 trade set up here. And what we're saying is that you're looking at a potential trade setup on the long side here. Where is the place where we anticipate resistance of a when a market rallies like this? Well, as I've said a number of times, we look to the last swing into the low. Okay, so that's the low, isn't it? The last swing into that low of an ABC correction is a DP off the wave B. So if we do our training mode and I go back to there somewhere, the DP off the wave B is there. So do you see how that was on the chart in advance? So I think what I said is that if we get up into that level, which it did there, then you want to bring your stops to at least break even. If I turn training mode off, you can see that you would have actually now been stopped out at break even. So, you know, if it does go up again, that would be frustrating, but you know, at least if it goes down now, you're protected. But this is such a key area to use, the DP from the last swing into the higher low. You see how it worked here? It happens so many times. If I go back to here, do you see this? This is the last swing into the high. Yep, you got that? There's the last swing into the high. You right mouse click, you do the decision point. This is an area of potential support. What has the yen done? Well, if I turn training mode off, look at that. Do you see that? It's gone right down to that level before it started to rally back up again. This DP off the last swing into the higher low just will call these reversals so many times. It's such an important area to have. Mazir says that I'd like to look at the Euro Canadian dollar. So the Euro Canadian dollar, this one here on a 60-minute chart. So which one are you off on this one then? So I can't quite see what kind of setup. So you're saying you're short off that one? Maybe your data is slightly different to mine. Oh, 240 minutes. So, okay. Well, there we go. So there's quite a few options there. So there's either the VS off the high there, which you probably took. Is that the one? So yeah. So what Mazir is taking is he's taken that VS short off a higher time frame resistance off the 4-hourly chart. So he's gone to this one here. He's then placed the DP off there. And then he's used that high time frame resistance. So when he's come down to his custom of 120. Do you see that? There's the VS at higher time frame resistance. So well done, Mazir. That's actually quite a nice bit of analysis. So well done off that. Yeah, so well done on that. So that's a good setup. So does that make sense on what we're trying to do, everybody? In other words, we're looking to place our DPs on the chart, on the higher time frame chart, then looking to see whether the market is making a reversal off those. In other words, a clear reversal. This is what we're looking for. We're looking for clear patterns, clear reversals off those, to then look to the shorter time frame to take the trade setups in the shorter time frame direction. But also understand totally that, like on the British pound, is that sometimes you'll have, just go back to the 4-hourly chart, sometimes you'll have lovely trade setups that catch really big swings, but other times you'll have losing trades like this. So not that one, losing trades like those ones, but the losses are kept small. That's the whole idea of what we're trying to do with our analysis, is trade when the picture's clear, accept small losses, but then look to run the profitable trades to have big profits, to then over time have the large profits that outweigh the small losses. It's not to avoid the losing trades. I think this is what so many amateur traders want, is they want to know where the market's going all the time. We understand that's impossible because markets are random half the time. So that's the first thing that amateur traders get in a mess with. Secondly, they want to avoid losing trades. They don't like making losses. We understand that you have to accept losses because the losses are there. You just have to keep them small. And then thirdly, you have to run your profitable trades. And this is what we were looking at a few weeks ago, is on this British pound, is that when it was around here, if I grab this, when it was up around here, you're about 4.5 hour profit, but it did almost give all of it back almost before it then started to go back with you. And this is the next hardest thing to do, and amateur traders can't, is they can't stick with it to let the trades have time to run and unfold. Patience is the virtue that you get paid for, says TJ. That's very profound, but you're dead right. So there's lots of things that you have to learn how to do, which aren't necessarily to do with trading, they're to do with psychology. And that's hopefully the tools we have here, hopefully make it slightly easier to do that. Right, they want to have a quick look at oil. See whether we've got a quick look at oil, and then we'll wrap up the webinar today. So here's crude oil. If we go out to a daily chart, so this is what we're looking at on crude oil, where we came down to a wave 5 low. The market's rallying up. It's gone past the DP from this wave 4. So it's not in a hugely clear position. It may well now continue rallying now because we've gone past this DP off the wave 4. So we may well just be on the long side of that. On gold, well, that's what we were looking at last week, wasn't it? We're looking at a VS on the daily chart, not on the daily chart, on the 4-hourly chart, a VS long, and that still looks to be like it's playing out here. It hasn't reached the target yet, so we'll see whether it does in that by next webinar. Right, are there any other questions people would like to ask in the last couple of minutes of the webinar? So I don't really want to look at any other examples as such, because a lot of you have said of some other good examples you've been working with. So that's absolutely brilliant. So well done to that, guys. Good to see you doing that. But really want to see if there are any technical questions or anything that you're struggling with that you'd like to ask in the last couple of minutes, because this is what these webinars are here for, to help you guys get the most out of the software, be it our standalone versions we've got here or our NinjaTrader version as well. So let's have a quick look on the ES. What's the position of the ES? Well, again, this is a little bit more difficult because there's a pivot high there. And we've gone beyond that. So the picture's not clear on this regular trading hours. If we go down to the 24-hour chart, let's look at the 15-minute of that. And again, the position's not really that clear because we've gone way above that last DP there. So this is the situation on the ES at the moment. We're not in that clear picture, nothing like what we were yesterday. Mark wants to have a quick look at the NASDAQ. The NASDAQ was slightly different actually, because what I was looking at the NASDAQ is, I'm just going to draw a front month of the NASDAQ, NQ. I'm going to go to daily, just do a front month one continuous of the NASDAQ. The NASDAQ was very interesting because what that did is it actually made new highs, didn't it, Mark? It made new highs basically last week. But if you do the DP off the previous pivot high there back in February, the front month just about tagged it. Yeah, so it looks like a failed breakout. So yeah, that's what I saw as well in the video that I did for the front of the main website. So, you know, that's why I suspected, because it was a failed breakout on the NQ. There was the ABC pattern on the ES. That is why that high of a few days ago is so important. So if that high is taken out, particularly on the ES, we're probably going to get a rally to new highs. But if this pivot here holds, you know, we're going to have a look to see whether we're getting a corrective high sort of unfolding about nowish. So that's why it's so important on that. Yep, to see what happens there. Right. Okay. I'd like to now say thank you very much to everyone. We've overrun by a few minutes. That's actually fine. So I hope you've all enjoyed today's webinar, and we enjoyed having a bit more of a detailed look at the large degree position of the NQ and also the ES, which we looked at, and a quick review of how we look at the general context of using MT Predictor when the picture's clear. I mean, it's a topic we go over again and again and again every single webinar. So it's so important just to ram that home again and again and again. Repetition is the best way to learn how to do stuff. And you just see examples again and again and again. You'll see these same things unfolding again and again and again. It gives you the confidence to wait for them. Sorry, Mark, we've sort of run out of time. I have to sort of a bit more in depth on that question. So Mark's just saying that it could well be choppy as options are going to go into expiry for this Friday. So be prepared for that. So, you know, you're dead right on that, Mark. So everybody have a good trading week. So let's see how next week evolves. Let's see whether these highs actually stay intact on the US markets or whether they're taken out. That's going to be important. And have a good trading week. And let's see whether we get some good, clean, clear trade setups, and have a good trading week, everyone. So stay safe out there, and we'll do it all again next week. So thanks, everybody, and bye.